All right, Ken Range Theory Trader back with you with another video. Just going over GJ for today. Just to show that I was looking at this pair. This post was 3 hours ago where I said I wasn't seeing much for today. I was going to try to get a 5-9 short, and this is the screenshot that I took at the time of making that post right here. So this is what I saw 3 hours ago, and I was just hoping that price would go close inside the 5 a.m. range and then just continue downward. So that was about it. Let me turn my notifications down. Phone's always going off. Okay, so with that in mind, let's go ahead and get over to the live chart. And this one I did a little. So here's the deal. Here's what happens. Or here's what happened, rather. This pair exceeded its average true range for the day. What do I mean by that? The average true range for this pair, if I go to the daily, and this is how I did this and why I took the entry right here on a break of the money candle, which formed the high of the day. And then there was a fair value gap that formed here. It did get filled, but it was there. And I'll show you that on the replay. But let me show you this. So at times, when you're looking at a 5-9, something that can put the odds in your favor is if you go to the average true range and just look at what it is for a day. But I use the prior day because if you look at the current day, it's going to give you the ATR in real time. So just the day prior, this pair moves on average. That little number there on the bottom says, let me see where to go. Right there. Okay. It moves about 139 pips per day. Okay. So anytime it moves more than that, then I believe, this is me, and of course it's not 100%, but chances of a pullback are strong. So because it had I think it was like 140 or so, 137, 140 ADR, and it went up. Let me go back. Let me get rid of all indicators. And so when it opened right here at 5 EST, no, it wasn't that. I want to say it went up like, God, maybe like 160 pips or so, something like that. Let me see. Let me go back to 5. Just the open price there. Yeah, about 163, 164. So notice see how that's above the ADR or average true range either way. So because it was above average, I was expecting a pullback because it was higher than the number that I just showed you for the daily rate, the average true range. So I hope that makes sense. So because of that, I was looking for a 5-9. I said, obviously it can't go up forever, but I'm looking for a break of the money candle during the New York session. So now when I drop down to the 5-minute chart, it was above the range. And I know on a lot of videos, I say that you should take your trades inside the range. You still could have did that. That's fine. But because I was following this pair, I did get stopped out a couple times. I think I got stopped out right here when it was teasing the top of the range. It shot out. So the money candle is this candle right here. This is the candle that creates the high of the day. Let me make this big so you can see it. This red candle right there. Okay, this one right here, I put an arrow on it. And it's not, I don't really trade like this every day. I really do stick to the normal pattern. But every now and then when a pair exceeds the average true range, sometimes you might get a 5-9 based on a pullback from the ATR. So this was the money candle. When price closes beneath it, that's what I call a break of the money candle. Okay, above the range. And of course, like I said, there was a couple things. There was just a bunch of things that came together. It exceeded the average true range. It was there was a money candle, a break of the money candle, and a fair value gap. Now the fair value gap did get filled. I'll show you where it did appear right here. Let me go one more bar. I don't know why it's not showing. But this is the fair value gap right here, from here to here. I'm not sure why it's not showing up. Let me go one more, and then maybe it'll show up. There we go. Okay, so there's the fair value gap right there. So you got a break of the money candle and a fair value gap. That to me is game. You can use this to get in. The non-negotiable is the high of the day. Sometimes the fair value gaps will get filled, but as long as price stays below the high of the day, then the trade is still valid. So my entry was down here though, so I did deal with some drawdown. This was like at 10 or so. When I'm trading 5 9s, or really when I start trading at 9, I like to really be done by 10. Um, and just anticipate the rest of the day to pretty much do what it's going to do. But that was it. But I did have some drawdown. Then when I let it play out, obviously it went down. I did not hold all the way to the profit target. I wish I would have. I would have made more, but I don't know where I got out exactly. But this right here was good for, I think I did like a, how I normally do like a 10 or 15 pip stop loss. For this one, I want to say I did 10, but either way, from here to here, let's just say 15 for the sake of argument. Okay, but this would have been good for 1 to 5. Okay, or if you waited until price closed inside, that would have been on that candle right there. It didn't hit the CRT low yet. It may still, I don't know. It bounced off my profit target, and that's where price is now. But if you waited till you got in, you still would have got about 1 to 3, which is still good. Okay, 1 to 3 is fine. So that was that. And when we go back to the 4-hour, again, this is the 5-9. The 5-9 is just demonstrated by the 5 a.m. range getting rated and then a straight close. So it's not a 3 candlestick theory pattern. It's a 2 candle where price just shoots up and then it shoots up one more time and then goes down. So you're out at the, you're out in one candle, and this was the one candle. The only other candle I saw do this was NJ, where it also did it. You see how this is 5. I don't think this one exceeded the average true range, but the pattern still played out. You had the 5 o'clock candle creating the high of the day, and then the next candle creating the high of the day made a new high, and then just closed all the way down there. This one would have been good for, this was a little cleaner too. Yeah, this was a really good close. There would have been a good entry right here at 10 o'clock on the dot. All the way to the bottom. That would have been good for 1 to 6. 1 to 5, 1 to 6. Okay, so that would have been an awesome trade there. Okay, so that's another 5-9. So there were 2 that really stood out. I didn't take this one though. I took GJ, as I showed on my channel. But at the same time, this was a good day. I did have some losses earlier in London though, so I'm not going to act like this is the only trade I took. No, I did sustain some losses. So that was that. But at the same time, managed to end the day with a decent withdrawal. And yeah, just going to try to keep it going. So, but like I said, just keep those losses small, keep the wins big, scale in. And this is always the price action that you're looking for. I'll go back to GJ for this. Just scaling in, adding another entry, on those red closes. You could have added one there. And then even another one here once price closed inside the range for more confirmation. And just write it down to, whatever your profit target is. But just don't be upset if price doesn't hit the bottom of the range. Just take what you can get, okay? Because once you see price starts to stall out, just, like I said, take what you can get. It did not hit the bottom of the range, so don't let it pull back. Be satisfied with what the market can give you. Okay, but that's it. Appreciate you watching. Have a great rest of your day. Take care.